And it is time for Talking Numbers. My next guest says the S&P 500 will hit 570 points by 2013. 570. He says the S&P is repeating the five-wave pattern of what he calls the 2007 to 2009 dump, and that we're already in the first phase of this repetition. We're Talking Numbers with Walt Zimmerman. He's Chief Technical Analyst at United ICAP. Walt, good to see you.
Thank you. Good to be back.
Let's talk about this technical analysis. The S&P 500 today closed at 1172, and you are predicting that it hits what?
570 points plus or minus by 2013.
Okay.
From the recent high of May of this year.
So you're talking about the S&P 500 being cut in half.
We're talking about a repeat of the decline from 07 to 09. And this is based on the nature of the price action of that decline.
I could only imagine what the economy looks like if the S&P 500 is cut in half. What are you predicting? Armageddon?
Well, what we're predicting is a repeat of what happened from 07 to 09. And this is the message of the price action, because that 07 to 09 decline was a classic what's known as a five-wave pattern. Initial leg down, little bit of a rebound, big dump, little bit of a correction, final plunge. And the price action since those March 2009 lows was completely consistent with a bear market correction. Now, why do we think that bear market correction ended at the May peak? Because of the massive head and shoulders top pattern. Our models had predicted the final top to the 1380 area by early May. It hit 1370 on May 2nd, fell, broke the neckline on August 2nd, and then the bottom fell out. So what we're predicting is a repeat of the rise in fear and deflation and economic contraction that characterized the 07 to 09 decline.
So what are you seeing that makes you think we're on the first leg of this right now?
Well, the market broke so decisively below the neckline of that head and shoulders. The S&P has to rally 100 points from here to even get back to that old neckline. So without a 100-point rally from here, plus, the bulls have no case. The market's dug itself such a deep hole. This is not what you want to see during a bull market correction. This is what you want to see at the start of another downtrend.
What's the bottom line here, Walt? What should investors do based on this advice and information that you're giving us?
I think if investors are still long, you have to plan an exit strategy. We're getting a nice rebound here. That typically follows the break of a head and shoulders neckline. I think investors have to be a scaled-up seller into that 1260 area if we're lucky enough to get that high. Otherwise, if it breaks this week's lows, I think you got to put in some protective sell stops and just get out, get on the sidelines, keep your powder dry, get safe, and stay safe.
All right, we'll leave it there. Well, you have a good day too, Walt.
Thank you.
Thanks a lot. Walter Zimmerman joining us.